Hi there. Thanks for stopping by our training on private lending and note investing with a self-directed IRA, self-directed solo 401k, or other tax-advantaged investment account. We'll talk through client investment examples so you can see how other investors are lending money and investing in notes with their self-directed IRAs, as well as in this short training, we'll share with you how these investors are leveraging our equity trust online myEQUITY digital processing portal to deploy their retirement capital for private loan and note investment opportunities. So first, let me share with you Guy from Georgia. He is a private lender, primarily focusing on lending money secured by real estate to other rehabbers. He deployed $100,000 from his self-directed IRA. Money was sent directly to a title company for the loan. His IRA held a promissory note and a first lien mortgage. So $100,000 deployed in return was a promissory note and mortgage. You'll learn that by making the loan, Guy was not subject to taxes or penalties. He wasn't borrowing against the account. He wasn't taking a distribution. This is considered an investment. So his IRA holds a promissory note and mortgage. He charges 10% interest. The borrower pays back the principal amount of $100,000 plus nearly 10% interest. He wrote the loan as a 10% per annum interest. The loan paid off in just under 12 months because the house was bought, renovated, and sold in just under 12 months. The $9,800 in profit went back to Guy's IRA, which was tax exempt. Really important to understand that when lending money with non-retirement dollars, interest income is subject to ordinary income tax rates. In a self-directed IRA, you're in a tax exempt environment, and you'll be able to create wealth and grow the accounts either tax deferred or, in the case of a Roth IRA, tax free. Now let's jump to another example. Investor from Ohio made a loan to a real estate rehabber, a $50,000 loan in this example. In this example, the investor not only used an IRA, but actually used two separate IRAs for the same transaction. So what you'll learn is you can actually partner multiple IRAs for a singular loan. So this investor did a 50-50 deal, loaning $50,000, charging 14% interest, partnered his traditional IRA at $25,000 and his Roth IRA at $25,000. So it was a 50-50 deal. The house was bought, renovated, and sold in 7 months. The profit was $4,000 in profit. And just like the last example, that $4,000 in profit went back into the self-directed traditional and Roth IRAs exempt from taxation. Another example that isn't related to real estate, but is a private loan, is a client here by the name of Seth, who attended one of our wealth building workshops. And after the workshop, he met up with an old acquaintance who had a small business. It was a trucking company. And this particular individual needed a $10,000 loan to buy more equipment. So this investor was willing to pay Seth's IRA a 20% interest rate on the $10,000 loan that Seth's IRA made. So the 20% interest, which was $2,000, eventually went back into the self-directed IRA, which is exempt from taxes, growing his $10,000 Roth IRA from $10,000 to $12,000 in less than 12 months. So it's not just real estate secured loans, like I shared with you from our investor Guy, as well as our investor in Ohio. They could also be loans to businesses. Additionally, you'll also hear where investors may look to buy existing already originated mortgages, or in some instances known as deeds of trust or trust deeds. So if you're an investor that is already investing in mortgage notes or deeds of trust, or you're looking into that investment option or opportunity, know that you can do that with a self-directed IRA. So our clients here at Equity Trust, Guy and our investor in Ohio, leverage our Equity Trust myEQUITY digital processing portal. This allows these investors to simply key in all the borrower's information online, upload all the loan documentation to Equity Trust, and then Equity Trust, per the client's direction and authorization, sends the funds directly to the title company or whatever bank account is designated to fund that particular loan transaction. This allows our investors to stay organized and efficiently and very quickly process all of their loan purchases as well as private lending transactions. Last but not least, check out the Equity Trust Investment District. If you're somebody that's looking for various alternative investment options, we at Equity Trust provide a menu list of assets and companies that you could potentially select from. Now, here at Equity Trust, we don't provide investment advice or guidance or recommend or endorse any third party, but we do provide this investment district so that you can make an educated and informed decision, and you can gain exposure to a wide array of companies and alternative investment options. Everything from mortgage notes and trust deeds, as we talked about in this training, to turnkey real estate investments, to private equity and other privately held securities, cryptocurrency, gold and silver, and again, a variety of other alternative investment options. So check out the investment district, myEQUITY, establish and fund your account, begin making your loan transactions. Until the next video training, keep leveraging compounding interest in the absence of taxation.